Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 127, recorded here on August 4th, 2024. This podcast is for entertainment only, not investing advice, so please do your own homework. All right, well, we'll start with a market update and outlook. It was a pretty wild week. And then we'll get into the top Bitcoin news and highlight this week's blog post and do some shout outs. So let's jump right in. August has begun with a bang, with the Dow ending the first session of the month down almost 500 points. Note that's only a 1.2% decline. The Dow crossed 40,000 points for the first time in May, but the sell-off also hit the S&P, NASDAQ, and Russell 2000. So much for the rotation. Volatility is making an appearance as markets try to size up the economic landscape, while the 10-year Treasury yield slid below 4% for the first time since February. Actually, it's down to like 3.8 now or something like that. What happened? Well, things seem to be celebratory on Wednesday after the Fed Chair Jay Powell announced that a September rate cut was on the table. But that message took on a different tone as new economic data was published. Initial jobless claims advanced the most since August 2023, while the PMI and ISM manufacturing indexes signaled an economic contraction. Of course, we also know on Friday the jobs report came out and it was very bad, a lot worse than anticipated. So this week data is now triggering some worries that the Fed may fall behind the curve, with the U.S. becoming the last major central bank in the West to embark on an easing cycle. That's at least one of the narratives, which is even bringing back a word that hasn't been heard for a while called recession. The other is that the soft landing is going according to schedule, but a healthy summer pullback or even a correction is due following stretched valuations, especially for mega caps and tech sectors like semiconductors. The economy shows resilience with 2.8% GDP growth in the second quarter. One analyst wrote, most importantly, consumer spending rose 2.3% and was the largest contributor to growth. Despite some signs of fatigue, the customer is alive and well. Looking ahead, Wall Street is cautious heading into the next week after having seen the tech-heavy NASDAQ composite slide into correction territory. The market narrative has changed in a matter of days, and concerns now abound that the Federal Reserve has slowed down the economy too much and has not eased policy soon enough. The latest non-farm payrolls report has stoked recession worries, and investors will be paying close attention to upcoming economic data. Monday, we'll see measures on the U.S. services sector, where attention will be on the employment and prices components. There will also be the Fed's Senior Loan Officer Opinion Survey to give the latest read on credit conditions in the economy. Finally, Thursday's update on initial jobless claims will garner attention, especially after the July jobs report. The second quarter earnings season will ease up somewhat, although there will still be reports from hundreds of notable names, including theme park and entertainment giant Walt Disney, construction equipment behemoth Caterpillar, meat processing major Tyson Foods, ride-hailing leader Uber, and vacation rental firm Airbnb. Moving into the top Bitcoin news, we'll start with three weekly summaries I thought would be kind of interesting to see how much news we could cover quickly. So the first one here is from No BS Bitcoin. This is block 855363, important news of the week. The Bitcoin Act of 2024, Senator Cynthia Lummis introduced the Boosting Innovation, Technology, and Competitiveness Through Optimized Investment Nationwide, or the Bitcoin Act, very clever, in the Senate. The legislation aims to establish a strategic Bitcoin reserve designed to manage the federal government's Bitcoin holdings transparently while safeguarding the private property rights of individuals and organizations. Update your node. The Bitcoin Core project has announced 2 new security advisories regarding vulnerabilities identified in Bitcoin Core version 0.21.0 and earlier versions. A comprehensive breakdown of these issues is available here, and there's a link, and I'll put a link to all of these in the show notes. We will follow up later in August to publicly disclose vulnerabilities fixed in version v23.0, and then in September to disclose those fixed in version v24.0, and so on until we run out of unmaintained versions to disclose vulnerabilities for. The announced policy will then start to be observed for new versions, said Nicholas Geggy. The Virtual Currency Tax Fairness Act, Coin Center's Jerry Brito said that the Virtual Currency Tax Fairness Act has been reintroduced in the Senate with bipartisan support. The act claims to establish an exemption similar to that for foreign currency, excluding low-value, everyday Bitcoin transactions from capital gains tax, which is good news. The University of Wyoming has launched the first academic institute focused on Bitcoin studies. Hong Kong likes the coin. The city's legislator, Johnny Ng, is exploring the feasibility of incorporating Bitcoin into the city's financial reserves. The state of Michigan retirement system likes the coin too. Filings show it owned $6.6 million of the ARK Bitcoin ETF as of June 30th. The U.S. House has passed the Financial Technology Protection Act of 2023, establishing an independent financial technology working group to combat terrorism and illicit financing. The group will make legislative proposals to prevent the evasion of sanctions and the facilitation of financial crime through digital assets and related emerging technologies, reported The Rage. Maybe they should start with the banking system. Russia attempts Bitcoin regulation. The Russian State Duma has passed 2 Bitcoin-related laws. The first law legalizes cryptocurrency mining in Russia starting November 1st, 2024, permitting registered legal entities and individual entrepreneurs to mine, while unregistered individuals can only operate within energy consumption limits. The second law, effective September 1st, 2024, establishes an experimental regime granting the Bank of Russia the authority to permit authorized companies to conduct cross-border settlements and digital currency trading. Tether go up. Leading stablecoin issuer Tether has released its Q2 2024 attestation report. The firm reported a net operating profit of $1.3 billion and has $5.33 billion in excess reserves. The company also claims to hold about 80,000 Bitcoins, according to CEO Paolo Ardoino. This positions Tether as the 18th largest entity in terms of U.S. debt ownership. Crazy. MicroStrategy now holds 226,500 Bitcoin. The corporation announced that since the beginning of the second quarter, it has acquired 12,222 Bitcoin for $805.2 million. As of July 31st, MicroStrategy's total Bitcoin holdings of $226,500 cost $8.3 billion or $36,821 per coin. The firm is also filing paperwork to issue new equity to raise up to $2 billion. That's billion with a B dollars. Virtual assets increasingly used by terrorist groups. The latest report from the Financial Action Task Force claims to shed light on virtual assets and virtual asset service providers, asserting that virtual assets are increasingly used by terrorist groups. Yet this bombshell comes devoid of proper citations or verifiable data, leaving those who are following the surveillance narratives to question its credibility, reports The Rage. And there's a link, I think, here to that article. EU has clarified the Markets in Crypto Assets, or MiCA rules. The European Securities and Markets Authority issued a report advising firms on how to engage with overseas companies to ensure MiCA compliance. The guidance states that unauthorized firms cannot provide services to EU clients unless those clients reach out first. Brink and Marco DeLeon. Bitcoin development nonprofit Brink announced that developer Marco DeLeon has joined Brink to contribute to Bitcoin Core's fuzz testing initiatives under the mentorship of Nicholas Gaugy. Together, they will build out Bitcoin Core's fuzz testing infrastructure. Global humanitarian organizations Save the Children and Fedi Inc., a developer building on top of the Fedi protocol, have announced a partnership aimed at transforming cash and voucher assistance delivery to communities most affected by inequality. This initiative will launch in the Philippines, providing select communities with Bitcoin as part of community cash assistance through the Fedi mobile app. Japanese public company Metaplanet has formed a strategic partnership with Hoseki, a global Bitcoin verification solutions provider, to enable users to verify the company's Bitcoin holdings. Texas-based Bitcoin miner Riot has raised its stake in Bitfarms to 15.9% as part of its hostile takeover attempt, acquiring $19.3 million in shares. This move follows Riot's success on July 25th in terminating Bitfarms' initial poison pill strategy, leading Bitfarms to implement a new strategy that increases the equity dilution threshold from 15% to 20%. CleanSpark has acquired two 75-megawatt mining sites in Cheyenne, Wyoming, formerly operated by MineOne, for $18.75 million. This acquisition comes after the Biden administration halted MineOne's operations due to national security concerns regarding Chinese ownership near a U.S. Air Force base, reports the Miner Mag. Lucky them. Argo Blockchain, a London-listed Bitcoin miner, announced it raised £6.5 million, or approximately $8.355 million, through a stock offering. The proceeds will be used for working capital, general corporate purposes, and debt repayment. Greenridge Generation to hodl self-mine Bitcoin. New York headquartered power generator and Bitcoin miner said it will retain self-mined Bitcoin in order to increase its Bitcoin holdings. The company has also entered into a $20 million common stock purchase agreement. Lava, a Bitcoin self-custody and spending startup, has announced a seed round, although the amounts have not been disclosed. It's not getting safer out there, folks. 4 men have been arrested after a 29-year-old Moroccan man was kidnapped, forced to transfer 3 Bitcoin, or about $200,000, and then strangled to death in Kiev, Ukraine, the city's police reported. Meanwhile, the Thai police has arrested a gang of 5 Russian men accused of abducting and assaulting a Belarusian couple in Phuket, Thailand, and forcing them to transfer approximately $900,000 worth of cryptocurrency before releasing them. So this just makes me think it's good to keep a low profile if you own Bitcoin. And also probably you want to keep your keys in multiple physical locations so nobody can break into your house and force you to transfer the coins unless you drive all over the place or fly all over the place. So be safe out there, folks. Gemini has warned its users that an unauthorized actor breached its vendor systems between June 3rd and June 7th, 2024, and accessed Gemini's customers' banking information, including their full name, bank account number, and routing number. The incident affects 15,000 individuals. Boy, you just can't stop the data breaches nowadays, can you? Some Blockstream customers are reportedly targeted by a new phishing email campaign. So watch out for that. Pay-to-snitch surveillance firm Arkham Intelligence, which aims to de-anonymize the blockchain, is reportedly obscuring the sales of its own Arkham shitcoin. Nice. TBD has announced the TBD Hackathon, set to take place at the Africa Bitcoin Conference in December. You can sign up for that, and there's a link. And finally, on the news highlights here, with No BS Bitcoin. Bitcoin Magazine revealed that the next edition of the Bitcoin Conference 2025 will be held in Las Vegas from May 27th to May 29th, 2025. That's pretty wild. Vegas. All right, next up is the Hodler's Digest from July 28th through August 3rd. This is from Cointelegraph. So let's see what's the top stories here. The first one, Senator Lummis introduces Bitcoin Strategic Reserve Bill in Senate. Okay, we know about that. Bitfinex hacker Heather Morgan spotted at Bitcoin Conference 2024. Let's see what this is all about. Heather Morgan, a self-styled social engineer and flamboyant rapper, also known by her alter ego Razzlecon, made headlines after being arrested for and subsequently pleading guilty to one of the most audacious cyber heists in history, the 2016 Bitfinex hack resulting in the theft of 120,000 Bitcoin, worth $4.5 billion at the time of her arrest. Contrary to popular belief that she was behind bars, Morgan reportedly appeared at the Bitcoin 2024 conference in Nashville, sparking curiosity and controversy among attendees. When Morgan pleaded guilty on August 3, 2023, she knew she could face up to 5 years in prison and receive a fine of $250,000. Since then, she's been awaiting sentencing scheduled for November 4th, 2024. Jameson Lopp, a Bitcoin developer and co-founder of Bitcoin custody firm Casa, found her presence extremely suspicious. He advised Bitcoin event organizers to regard her as a threat actor and deny her entry. Lopp's concerns highlight the broader unease within the crypto community regarding Morgan's intentions and the potential risks she might pose at these gatherings. He told Cointelegraph that he believes there could be two explanations for her attendance at these events. A charitable explanation would be that she's seeking consulting gigs in order to pay the $250,000 fine she owes to the government, according to Lopp. She has reportedly introduced herself as a Web3 advisor at Bitcoin conferences. However, Lopp said an adversarial explanation would be that she's seeking to reduce her sentence by collecting intel on behalf of the government. A spy. Let's see. Next, 4 suspects forced a Bitcoiner to transfer Bitcoin before killing him, police say. Well, we already heard about that one, unfortunately. Trump's Bitcoin sneakers are already on eBay for $2,500. Listings for pairs of Donald Trump's limited edition orange Bitcoin-themed sneakers have already made their way onto eBay, with scalpers hoping to sell their spot in the pre-order queue for as much as $2,500. At the time of writing, there were 12 listings on eBay for the Bitcoin orange-colored high tops. Prices start as low as $700 via live auction, but range as high as $2,500 with a or best offer condition. One offer jokingly set a price of $69,999. However, there is no telling if the sellers will keep their word or if the listings are legitimate. Most of the listings promise to ship the footwear to their buyer once they receive it, which is expected between September and November. Most of the sellers appear to have high ratings, though more than one has been accused of being a scam in the buyer feedback section. Trump's Bitcoin-themed footwear went live for pre-order on the official Trump Sneakers website on July 31st, with a limited edition run of 1,000 for the orange high-top shoes. They sold out within 3 hours of launch. Notably, the website said 5 pairs of the limited edition shoes would be randomly signed by Trump, meaning that Trump sneakerheads would have a 1 in 200 chance of receiving a signed pair. I don't even know where to start with this one. First of all, I wouldn't be wearing Bitcoin sneakers unless you want to get $5 wrench attacked. And then secondly, this is just vintage Trump, finding an opportunity to make a few bucks. Let's see, what else do we have here? Judge grants ex-FTX execs request to postpone reporting to prison. A federal judge has granted a motion filed by lawyers representing former FTX Digital Markets co-CEO Ryan Salam to delay reporting to prison until October 13th. In a July 30th filing by the United States District Court for the Southern District of New York, Judge Lewis Kaplan approved a motion allowing Salam to push back his self-surrender date by 45 days as part of his sentence of 7.5 years in prison. Salam's legal team requested the delay due to medical complications from a dog biting the former FTX executive's face on June 29th while he was visiting a friend's home. The July 26 motion by Salam's legal team redacted medical information related to his injuries, but claimed that a German Shepherd mauled him and he would require treatment and surgery before reporting to prison. He was initially going to report to prison on August 29th, roughly 3 months after being sentenced. The former FTX executive returned to the social media platform X after roughly 2 years following his May sentencing hearing. On the day of the alleged dog attack, he suggested that a surgeon who didn't hold his political views would be more likely to intentionally harm him while treating the wound. Wow, you just can't make this stuff up. Let's see, memorable quotes. Something about Ethereum shitcoin, don't care. FUD of the week, Solana, don't care. SEC charges BitClout founder. Well, we'll go into this one in a little bit more detail, but the highlights of this are on July 30th, the United States Securities and Exchange Commission, alongside with the United States Attorney's Office for Southern District of New York, announced charges against BitClout founder Nader Al-Naji. The SEC's complaint alleged BitClout founder sold $257 million in unregistered securities through BitClout's native token BTCLT and defrauded investors by misusing a portion of those funds. The SEC also named Decentralized Social, or DeSo, a newer project from Al-Naji as in the complaint and a corresponding press release. Crypto sleuth investigates suspect in Sydney Sweeney's hack. A few weeks after American actress Sydney Sweeney suffered a major cryptocurrency-related hack on X, some new details on the attack and the alleged hacker have surfaced. Zach XBT, a pseudonymous independent on-chain sleuth, took to X on July 30th to post his investigation into the recent hack of Sydney Sweeney's X account and the alleged connection of convicted hacker Gurvinder Bangu to the incident. The X account of the actress was hacked on July 2nd, 2024, with the attacker promoting a Solana-based token, Sweeney, in a pump-and-dump scheme. According to findings by Zach XBT, Bangu was one of the people behind the hack. Bangu, also referred to as Gurv in the post by Zach XBT, is described as a convicted hacker who has served time in the United Kingdom for hacking into Instagram accounts and blackmailing users. Wow. So maybe just don't go on social media except Nostr? I don't know. All right, that wraps that one up. And then let's get into Bitcoin.com week in review and see what's new here, if anything. Let's see. Following a heinous jobs report, questions are arising about whether the United States will experience a soft landing or if a full-fledged recession is on the horizon. All 5 major U.S. stock market indices saw notable declines on Friday, and the crypto economy fell by 5.82% to reach $2.2 trillion. Coinbase posted a $1.4 billion in total revenue for the second quarter of 2024, marking a period of continued growth and progress in the crypto industry. The company's earnings report said it also made strides toward regulatory clarity in the U.S., a key development for the broader crypto economy. The Bank of Zambia has defended its de-dollarization plans, but also seeks input from stakeholders who oppose the proposal. The central bank governor clarified that they are not proposing anything new. Instead, the bank aims to enforce existing laws designated the Kwacha as the sole legal tender for domestic transactions. And I'm sure it's holding up just great. The crypto exchange Bybit has introduced a digital rupee as a new payment method for Indian rupee transactions. The launch aims to provide a secure alternative for INR users on its platform. Following the announcement that U.S. Vice President Kamala Harris won't attend the Bitcoin 2024 conference in Nashville, well, we know she wasn't there, Gemini co-founder Tyler Winklevoss said the crypto industry will, quote, show no mercy in November. The politicians. All right. Next up is from Crypto Potato. It's been a while since we've heard from these folks. This article was posted on August 3rd. A little bit deeper dive into the BitClout situation. The U.S. Securities and Exchange Commission and the Department of Justice charged Nader Al-Naji with orchestrating a multi-million-dollar fraudulent crypto asset scheme involving the social media platform BitClout and its native token BTCLT. The securities regulator's complaint revealed that Al-Naji raised over $257 million through unregistered offers and sales of BTCLT in November 2020. In the process, the exec allegedly misled investors by claiming the funds would not be used for his or other BitClout employees' compensation. However, the complaint accuses Al-Naji of spending over $7 million of these funds on personal expenses, including renting a mansion in Beverly Hills and giving lavish cash gifts to family members. According to the complaint released earlier this week, the SEC alleged that Al-Naji portrayed BitClout as a decentralized project to evade regulatory scrutiny and give the impression that no company was behind it. He is believed to have used the pseudonym Diamond Hands to create the illusion of autonomy. The SEC also claimed that Al-Naji secured a letter from a prominent law firm based on his mischaracterizations, suggesting BTCLT were not likely securities under federal law, and even told certain investors that he was engaging in this subterfuge to avoid legal compliance. Commenting on the charges, Gerber S. Gruwal, director of the SEC's Division of Enforcement, said, as alleged in our complaint, Al-Naji attempted to evade the federal securities laws and defraud the investing public, mistakenly believing that being fake, decentralized generally confuses regulators and deters them from going after you. He is obviously wrong, as we have shown time and again, and as reflected in the SEC's detailed allegations here. We are guided by economic realities, not cosmetic labels. Al-Naji's wife, mother, and wholly owned entities are also named in the complaint as relief defendants for the investor funds he directed to them. In a parallel investigation, the U.S. Attorney's Office for the Southern District of New York has brought charges against Al-Naji. Well, scammers are going to scam. That's why you need to not play around with these shitcoins. Okay, so for FUD of the week, because obviously the market crashed last week, Bitcoin's down, crypto's down. You have to love Forbes magazine just piling it on with this article. This was posted on August 3rd. FBI issues serious with a capital S crypto warning amid $300 billion Bitcoin, Ethereum, Solana, BNB, and XRP price crash. Bitcoin, along with other major cryptocurrencies, Ethereum, Solana, and XRP, have crashed back this week, falling along with the stock market in a crash that could get a lot worse. The Bitcoin price has dropped towards $60,000 per Bitcoin after touching $70,000 just last week. Other top 10 cryptocurrencies, Ethereum, Solana, and XRP, have also dropped back, wiping a combined $300 billion from the crypto market since late July, just after Elon Musk broke his silence on Bitcoin. Now, as traders brace for a Donald Trump Bitcoin game changer, the U.S. Federal Bureau of Investigation has issued a serious crypto warning over attempts by scammers to steal users' funds. The FBI warning of scammers impersonating cryptocurrency exchange employees to steal your money. The Domestic Intelligence and Security Service posted to X, if you have been a victim of this scam, report the activity associated with it. If you receive a call or message indicating any kind of account problem or compromise, do not respond, even if it appears official and indicates you must act immediately, an FBI notice read, alongside a number of other tips to avoid losing crypto to fraudsters. Hang up. Call the cryptocurrency exchange's official phone number to verify if there's a problem. Do not use any phone number the caller provides. Do not go to any websites or click on links the caller sends you. Navigate to the official cryptocurrency exchange website separately. The crypto market continues to be plagued by scammers and hackers, with times of Bitcoin price and crypto market volatility making it easier for those trying to steal crypto from panicked users. The amount of Bitcoin and crypto stolen worldwide more than doubled in the first 6 months of 2024 from a year earlier, mostly due to a few massive attacks and the Bitcoin and crypto price rebound from 2022, according to a report from blockchain researchers TRM Labs out last month. While we have not seen any fundamental changes in the security of the cryptocurrency ecosystem, we have seen a significant increase in the value of various tokens from Bitcoin to Ethereum and Solana compared to the same time last year, Ari Redbord, global head of policy at TRM Labs, told Reuters. Hackers stole almost $1.4 billion worth of crypto between January and June 2024, compared with $657 million in the same period in 2023, the blockchain sleuths found. Just piling it on. Well, the reality is that you need to be smart about how you hold your coins, and holding them on an exchange is just asking for it. So cold storage is the way, and it's probably better to hold your keys in multiple locations and have multi-signature so that it's very, very hard to move your coins. It also makes it a lot easier to weather the storm of a downturn. You just hodl. But the timing of these types of articles is always quite interesting. Next up from Decrypt. Thought this was interesting. This was posted on August 3rd. Most Bitcoin Layer 2 networks won't survive, according to Galaxy Research. Bitcoin Layer 2 scaling networks, particularly roll-ups, have been the talk of the town in crypto developer circles as a new means to keep Bitcoin payments cheap, fast, and decentralized. But despite their vaunted promise, data and analysis from Galaxy Research suggests the vast majority of Bitcoin rollups will be unsustainable. Rollups on Bitcoin that post data to the base layer will face a significant problem. The cost to post data, wrote Galaxy analyst Gabe Parker in a report published Friday. Rollups on Bitcoin will need to generate substantial revenue from transaction fees on their own networks, driven by sizable numbers of users paying to transact on Layer 2. Rollups are off-chain execution environments where transactions are rolled up and later settled in batches on a more decentralized, more secure blockchain. Ethereum has used rollups like Optimism and Arbitrum to scale for a long time, but developers only recently unlocked the technology to build rollups on Bitcoin. Bitcoin rollups will use the Bitcoin blockchain as a data availability layer. That means they'll post enough data to the blockchain so that anybody running an ordinary Bitcoin node can reconstruct the most recent state of the rollup network at any time. Bitcoin blocks only have 4 megabytes of storage capacity, however, and posting data to Bitcoin requires a lot of data. Specifically, each data posting will require zero-knowledge proof outputs and state differences, the latter of which scale in size alongside transaction volume and type. Each individual data posting transaction can consume up to 400 kilobytes or 0.4 megabytes of block space, effectively occupying 10% of an entire block, wrote Galaxy. As there will be multiple rollups, which are expected to post their data every 6 to 8 blocks, rollups could quickly drive base layer fees to new heights and price out smaller transactions. Given the competition for block space, only the rollups that generate the most fee revenue to pay their way into blocks will be able to stay afloat. Galaxy estimated that in a low-fee environment, when ordinary transactions cost 10 sats per VB, 10 satoshis per VByte, a unit of block space data, rollups will accrue $460,000 in monthly expenses to afford Bitcoin security. High-fee environments of 50 sats per VB, as seen when ordinals or tokens minted via the Runes or BRC20 standards are seeing high activity, can drive monthly costs to $2.3 million. Wow. Granted, fee estimates among different rollup systems are still highly variable. especially since no real rollups have launched on Bitcoin yet. Bitcoin OS, which claims to have verified the first zero-knowledge proof on Bitcoin, told Decrypt in April that it expected to initially achieve 10x scale for transactions. The degree to which these costs translate to rollup users also depends on how much activity the rollup has gathered. The greater the volume, the smaller the cost for individual transactions. It's worth noting that estimates for ZK proof and state difference sizes are continually evolving as teams research and optimize data compression mechanisms, Galaxy said. One burgeoning Bitcoin rollup system is called Build on Bitcoin, or BOB, a hybrid rollup meant to connect to both Ethereum and Bitcoin. Right now, Bob is merely an Ethereum layer 2 that offers fast, virtually free transactions, but will later upgrade so that it plugs directly into Bitcoin as well. Alexei Zamayatan, co-founder of Bob, believes Bitcoin rollups can be just as cheap as Ethereum rollups and that they shouldn't actually use Bitcoin's main chain data for data availability at all. Instead, he recommends using Celestia or a merge-mined Bitcoin sidechain for this purpose, an option that's cheaper but loses Bitcoin's full decentralization and security as a trade-off. No one will use Bitcoin L2s if they are 100x more expensive than Ethereum L2s just because it's on Bitcoin, wrote Zamayatan on Twitter on Friday in response to the Galaxy report. Good news, they won't be more expensive. So we'll see. Quite interesting, though. Always something new happening on layer 2, and we'll have to continue to watch that. Next up, a little bit of, I guess, good news was posted today. Morgan Stanley to offer Bitcoin ETFs to select clients. Well, the article was posted today. I guess the news came out last week. In a landmark move, Morgan Stanley is set to become the first major Wall Street bank to offer Bitcoin ETFs to its clients. Starting Wednesday, the bank's 15,000 financial advisors will be able to solicit investments in 2 Bitcoin ETFs, BlackRock's iShares Bitcoin Trust and Fidelity's Wise Origin Bitcoin Fund. This development is a significant step in the mainstream adoption of Bitcoin, reflecting the increasing demand from high net worth individuals for exposure to digital assets. Morgan Stanley's decision to offer Bitcoin ETFs is not without its precautions. The bank has set strict eligibility criteria for its clients. To qualify, clients must have a net worth of at least $1.5 million, exhibit an aggressive risk tolerance, and have a desire to make speculative investments. These investments will be available only in taxable brokerage accounts, not retirement accounts, ensuring that clients are fully aware of the speculative nature of the asset. Oh, they're protecting you. Isn't that nice? A source familiar with the bank's policies noted that, and of course, it's only the ultra wealthy that are going to be able to do this, of course. A source familiar with the bank's policies noted that Morgan Stanley is taking this step due to clients' demand and to stay competitive in the rapidly changing digital asset market. One of the executives claimed, "We're going to make sure that we're very careful about it. We are going to make sure everybody has access to it. We just want to do it in a controlled way." The approval of spot Bitcoin ETFs by the U.S. Securities and Exchange Commission in January 2024 paved the way for this significant development. The introduction of these ETFs has made Bitcoin investments more accessible, cheaper to own, and easier to trade. Despite initial skepticism from major financial institutions, the success of these ETFs in attracting substantial inflows has been undeniable. In just 8 months, spot Bitcoin ETFs have accumulated nearly $18 billion in net inflows, with BlackRock's iShares Bitcoin Trust and Fidelity's Wise Origin Bitcoin Fund being the primary beneficiaries. These products have set new records in the investment world, demonstrating the strong demand for Bitcoin exposure among institutional investors. Morgan Stanley's move to offer Bitcoin ETFs is seen as a direct response to growing client interest. The bank's decision is also a reflection of the broader acceptance of Bitcoin in mainstream finance. Despite the asset's volatility and past criticisms from prominent figures like JP Morgan Chase CEO Jamie Dimon and Berkshire Hathaway CEO Warren Buffett, Bitcoin has continued to gain traction. Its price has more than doubled in the past year, reaching new all-time highs. To manage the risks associated with Bitcoin investments, Morgan Stanley will closely monitor its clients' digital asset holdings, The bank aims to prevent excessive exposure to this volatile asset class. Morgan Stanley's cautious yet pioneering strategy sets it apart from other major banks like Goldman Sachs, JP Morgan, Bank of America, and Wells Fargo, which have so far maintained more restrictive policies on Bitcoin ETFs. These institutions currently offer Bitcoin ETFs only on an unsolicited basis, meaning that clients must actively seek out these products. This move by Morgan Stanley is a milestone in the adoption of Bitcoin by traditional financial institutions. Eric Balchunas, a senior ETF analyst at Bloomberg, called the decision a major deal, noting that Morgan Stanley's advisors manage nearly $5.7 trillion in client assets, the largest among U.S. wirehouse brokers. The performance of Bitcoin ETFs has been a mix of highs and lows. On August 2nd, spot Bitcoin ETFs recorded major outflows, totaling $237.4 million. BlackRock's IBIT saw $104.1 million in outflows, followed by ARK21 shares ARKB with $87.7 million. The industry's reaction to Morgan Stanley's announcement has been largely positive. Bitcoin investors view the bank's move as bullish, anticipating increased demand for Bitcoin through ETFs. In the meantime, Bitcoin's price has yet to react significantly to the news, with the recent downfall to the $60,000 mark. Many have attributed the 6.9% drop in Bitcoin's price in the past couple of days to the escalating tensions in the Middle East. I don't know about that. The long-term implications of Morgan Stanley's move could be profound. The increased demand from high net worth clients could provide a steady inflow of capital into the Bitcoin market. Finally, an article from Bitcoin Magazine. This was posted on August 1st. Michael Saylor's MicroStrategy bought 169 Bitcoin for $11.4 million in July. MicroStrategy reported its financial results for Q2 2024, revealing an increase in its Bitcoin holdings. The company acquired 12,222 Bitcoin since the beginning of the quarter, at an average price of $65,882 per Bitcoin, bringing its total holdings to 226,500 Bitcoin, purchased for $8.3 billion at an average cost of $36,821 per Bitcoin. As of July 31st, in July alone, MicroStrategy acquired an additional 169 Bitcoin for $11.4 million, Michael Saylor announced. President and CEO Phong Le highlighted the company's focus on its Bitcoin strategy, including BTC yield, as a key performance indicator. This metric measures the percentage change in the ratio of the company's Bitcoin holdings to its assumed diluted shares outstanding. Year to date, MicroStrategy achieved a BTC yield of 12.2%, targeting an annual yield of 4 to 8% from 2025 to 2027. In addition to its Bitcoin strategy, MicroStrategy saw a 21% year-over-year increase in subscription services revenues, totaling $24.1 million. The company also successfully raised $800 million through a convertible senior notes offering and announced a 10-for-1 stock split effective August 7, 2024. Since the beginning of Q2, we grew our Bitcoin holdings by adding 12,222 Bitcoins through proceeds from our capital markets activities and excess cash, said CFO Andrew Kang. Additionally, we announced the 10-for-1 stock split earlier this month. We continue to closely manage our equity capital and are filing a registration statement for a new $2 billion at-the-market equity offering program. Through our use of intelligent leverage, we have again achieved a BTC yield of 12.2% year to date, which we believe demonstrates significant Bitcoin accretion to shareholders. As of June 30th, 2024, the original cost basis and market value of MicroStrategy's Bitcoin were $8.3 billion and $14 billion, reflecting an average cost per Bitcoin of $36,798 and a market price per Bitcoin of $61,926.69. And finally, wanted to mention this week's blog post on the Bitcoin Fortress Substack. I will include a link in the show notes. Article is entitled Building a Resilient Home. In an increasingly uncertain world, the importance of home resilience cannot be overstated. Whether faced with natural disasters, economic instability, or civil unrest, being prepared to protect and sustain oneself and one's family is paramount. So check it out. And if you like it, subscribe. It's free. And if you really like it, you can support me on Substack. Before I wrap up, wanted to give a shout out to the top boost on Fountain last week. Top boost is at Lili with 640 sats, and at God's Death with 236 sats. Thank you both. Thank you. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack at bitcoinfortress.substack.com. And you should also listen on Fountain because you can earn sats just for listening. Free. And you can follow me on Nostr. I include my NPub in the show notes. I'm not on any other social media. And with that, I will talk to y'all next week. Bye-bye.